Hello, this is your teacher, PE ratio. That's short for price earnings ratio. And sooner or later, I'm just going to say PE ratio because when you're in my community, you're going to learn these key terminologies. I actually have a video explaining key terminology. But so somebody asked me when to buy a stock. Let me share my screen. Okay. So we're gonna go to barchart.com. Okay. First thing we're gonna do here. And there's this company I like. It's called IREN, and I'm trying to figure out when to get in. When is a good time to get in? I know when, but I'm looking for. I wanted to drop a little bit more. It's ticker symbol IREN. So the analyst gives this thing a strong buy. For some reason, they love this company, but you can't just go off of one thing. You got to go off of many different things, and also you always got to look at the financials. I think the stock was doing all right. I mean the financials, but let's see here. So relative strength. We're gonna go to um. We're gonna go. See this area over here. You got technicals. You got options and stuff like that. So we're gonna go right here to technicals. Once we type in our company, you see our company name right here, IREN. We're gonna go to technicals, and we're gonna go to traders cheat sheet. Okay. So I bought this. I spent about $400 a year on this service. Um, I think it'll give you a free version. I don't know how much stuff you'll get there, but anyway, we went here. This IREN. So long story short, I'm just explaining it real quick. So if you look in here, you see something called 14-day relative RSI at 30%. 14-day relative strength index is usually measured in 14 days. So you got RSI means relative strength index. When you see this 30% here, that means the stock is oversold. So that means that if this stock dropped down from 69.56 $69.56 today to or tomorrow down to $8.79, that presents a good buying opportunity. But if it drops that far down, something must be wrong with the company. So first of all, let me just say that. So this 14-day RSI at 30% signals overbought, while this 14-day relative strength index at 70%. Um, I'm sorry, this is overbought. I don't know if I said that wrong. So that let me go back down there. They're saying that this 14-day relative strength index at 30, $8.79. This signals oversold. Oversold. That means that what we mean by that, when you have more buyers than sellers, that makes the stock go up. When you got more sellers than buyers, that makes the stock go down. So that's first and foremost. So if this usually you have a big sell off. Usually is when like Trump said something Friday, and there was a big sell off, and stocks drop. But stocks have circuit breakers, so they don't just drop to zero. They can only drop so much in a day. Okay, so let's say that this stock did drop to $8.79 from 69.56. I'm gonna go figure out why. I'm gonna like, damn, that's a good time to get in. But also, I'm gonna think something is wrong with the company. Something is terribly wrong if it went down that far. So, this 14-day RSI at 30% means it's oversold. That's a good time to get in at 8.79. Now, 14-day RSI at 70% signals overbought territory. So that means the stock is like it might be dropping back down. So this last right here, so this is $69.56, which is what the stock is trading at. And the 14-day relative strength index at 70%, that signal overbought So the price has to come below $64.69. So I'd be looking for somewhere to be in the middle, the middle of 69.56 and $8.79. So as you can see, right here is a 50% retracement from 52-week high. So I'll be looking to here you go. I'm sorry, the one in the blue, 14-day RSI relative strength at 50%. So 50% is pretty much between um a relative strength of 30% and a relative strength index of 70%. So I'll be looking to get if it goes to like $47.92, I'll be looking to get in. And if it goes down to this 14-day RSI at 50%, I don't see is there one for 40? I'll be looking to get somewhere right $47.97, or I hope it goes down to like 39. I'll check the company and do my research, but this is where I'll be looking to get in. So that's how I figure out how I'm going to get in the stock. And last but not least, if you all got time, I did this first, because I know y'all want to see this stuff. We could probably do another if you want to, but I said I was gonna keep this short. But I do want to give you a slide. Now we're gonna go here. This is about yeah. So come on now, stay with me. It's gonna talk about what a relative strength index is. I showed you what it is, but it's gonna talk about what it is here. This is about 8 slides, so bear with me. 8 or 9, probably 9 slides. So here we're gonna go through this real fast. Understanding relative strength index. Okay, so this is a slide for you all. Let me move this down here so you all can see this. So what is a relative strength index? So in the blue here, it's a momentum oscillator, technical indicator that measures the momentum and speed of price movements. That's what it does. I'm not gonna read all this. I'm just brief over this for you all, so I won't bore you all. You're probably already bored now, but learning you got this is good stuff. So it also measures gains and losses. The RSI is calculated using a stock's recent gains and losses to assess its momentum. The range is from anywhere from 0 to 100. So 50, like I said, the 50% RSI that shows you is what I'll be looking to get in at. Okay, the relative strength index is a technical analysis tool that provides insight into stock's momentum down here at the bottom and potential overbought and oversold conditions. Understanding how to interpret RSI, investors can incorporate it into their decision making process to identify potential trading opportunities. Let's keep going. RSI calculation. The relative strength index is a technical analysis tool used to measure momentum of a stock's price movement. Okay, let's keep going. Here we go. RSI interpretation. Overbought conditions. When the RSI value rises above 70, it indicates that the stock is in overbought territory. That's what I was saying earlier, suggesting that the price might be traded at a level that is higher than what the current market conditions justify. This could signal a potential sell opportunity. I would sell if I was up that much. I'd probably sell when it gets there, unless I was just in a good stock that's making money like APLD. But we'll talk about that one later. Oversold conditions. When the RSI value falls below 30, it indicates that the stock is in an oversold territory, suggesting that the price may be trading at a level that is lower than what the current market conditions justify. This could signal a potential buy opportunity. That's what I said right there. If it goes down to there, I'm gonna check it. I'm gonna make sure. Why? Why did it go all the way down there? That's crazy. Identify potential opportunities. Traders and investors can use these overbought above 70%, oversold below 30% levels as signals to identify potential buy or sell opportunities in the market. However, it is important to consider other technical analysis and fundamental factors before making decisions. So this is not a sole we don't solely base our decision on this. And the other in the class, I mean, you'll start to see that I did other I'm doing fundamentals and everything else. This is just on top of what I already know. This is like trading technical analysis. So confirming the signal. The we down here in the orange. Bottom right. The RSI overbought and oversold levels should be in conjunction with other technical indicators and market analysis to confirm a potential trading opportunity. Relying solely on RSI can lead to false signals, so it's crucial to have a comprehensive understanding of the market and the stock's overall performance. All right, let's keep going. We almost done. We almost done. So our RSI divergence price versus RSI. So 90 prices considered high. A 90 RSI was just way high. A 80 RSI is way high. They consider a 70 this overbought territory. That's why they said territory. They didn't say it's not. They didn't say necessarily it's overbought. They said this is in territory. Once it hit 80 is high, 90 is high. But they consider 60 RSI of 60 to be low. So even 60, I might consider to buy some of that. This is what they mean by buy the dips. Now, next time you hear somebody talking about buy the dips, they don't know, but you know. And you tell them PE ratio taught you this. RSI in action. Stock price chart. Example of a stock price chart. The charts didn't come up here. I was trying to bring them on here. They just didn't come up. So I'm going to skip this. Um, I might put some charts in another slide. So here's the limitations of the relative strength index. RSI is not a standalone indicator. Should be used in conjunction with other technical analysis, as we mentioned before. RSI can give false signals. The RSI can generate buy or sells signals, especially during periods of low volatility or consolidation. RSI is backward looking. The RSI is based on the past movements and may not accurately predict the future. RSI can be affected by market conditions. The interpretation of RSI levels can be influenced by market conditions and trade volatility and trading volume. Okay, let's keep going. Almost done. Okay, the RSI is a valuable tool for technical analysis to assess the stock momentum and identify potential trading opportunities. By understanding how to interpret RSI and its limitations, it has limitations. Investors can make more informed decisions, and that is it. So this is it for the slide. I'm gonna stop sharing my screen, and I hope y'all enjoyed this. And y'all don't look too bored. So, any questions you want to ask, just drop it below. Okay. So, peace.